it's absolutely appropriate that we have a veteran of the markets as our market master today, Nilesh Shah, Managing Director and CEO of Envision Capital. Good morning, Nilesh. Well, first up, that's the question really, is have the indices, or have the stock prices discounted all the good news possible? Is it a little difficult to eke out gains from here, maybe up until the budget?
Well, after this kind of a rally which is kind of come in the marketplace for the last few weeks, few months now, it's quite possible and very natural for the markets to go into some kind of a consolidation phase. The mean reversion process seems to be by and large over. Markets are trading at fair levels. They are trading around the valuations which are long-term averages. And clearly at this stage, perhaps investors are focused more on how the whole monsoon is going to play out, and really it's going to be as severe as what it is being played out to be. And two is the union budget. What really does the union budget have in store? And are there any real big bang initiatives in the budget to kickstart economic growth and ensure that we come out of this sub 5% growth rate? I think these are the two big events which I think market players are looking forward to.
Well, there's some news coming in. The Commerce Minister will detail the trade data for the month of May at 12 noon later today. We're expecting the trade data to come in at about $10 billion or so. So that is the expectation. But 12 noon is when we will know what the trade data is for the month of May. Nilesh, hi, good morning. We've seen, in the last couple of days, some move back to defensive. So be it IT, be it pharma, FMCG, etc. I just wanted your view on IT stocks. Is this a good time to be accumulating even the ones who have not performed, like Infosys?
Absolutely. I think IT stocks look very, very attractive. We probably believe that they haven't looked so attractive in the last few months or few quarters. I think IT, after that first leg of up move last year, has gone through a fantastic consolidation of about 3 to 4 months. Valuations remain attractive. The rupee has appreciated, but it's not appreciated in a very significant way to basically alter the growth trajectory for technology companies. A lot of tier 2 technology stocks are now available at 9 to 10 times earnings, current year earnings. And if you really look at the non-defensive or the beta pack, a lot of them now are trading at valuations which probably factor in the growth for the next 2 or 3 years and definitely factor in a blue sky scenario. So I think if you were to kind of really take a contrarian call, if you were to kind of do some value hunting in the marketplace, I clearly believe that technology fits the bill in the most appropriate manner currently.
So when you say value hunting, would you look for those that are trading probably at 14 times or lower, or would you even buy the TCSs of the world?
I probably think in the large cap space, the risk reward is, I think, highly favorable towards Infosys. Okay. I probably still believe that Infosys might have lost some form, but it's not lost its class. I still think it's not an irreparable situation. And I'm quite sure that over the next few months or few quarters, you could actually see better days. And with these kind of valuations, I mean, Infosys is still trading as if the Nifty is at 6,000 and not at 7,500. So I clearly believe that from a 12 to 18 month scenario, I think the risk reward is highly favorable in terms of Infosys versus rest of the pack.
So what are the other companies where the risk reward is equally high?
I think the stocks which we own, we still continue to like Persistent and IT Technologies. These are, I think, two tier 2 companies where growth is still intact. Valuations are very favorable. And they've gone through a fantastic kind of consolidation over the last 3 to 6 months. So I think in the tier 2 space, we like these two companies. We own these two companies.
Okay. Well, before I come to the other sectors, the non-IT sectors, what's the view on the index itself? On a 12-month trajectory, do you there are some fantastic numbers. We have got 8,400, 8,500, 12 months from now. What's your own view?
I think that's a likely scenario. If we really look at an 8,400 for the Nifty, that probably translates into an 11 to 12% upside on the Nifty, which I don't think is unachievable. That's a very realistic number to look at. The key is that
who will take it there?
Who will take it there? Number one. Number two is can we now move from that 8 to 9% earnings growth for the Sensex to about 18 to 20% earnings growth? And three is that does the sentiment get further boosted with some really big bang initiatives in the budget which warrant a P expansion? keep in mind that in the past, we've peaked out around 22-24 P multiple, the BSE Sensex. So if we do get to that situation, where there is ample liquidity chasing Indian assets, there are sentiment boosters, and we see an earnings growth coming back to 18 to 20% for the Sensex, I think levels of 8,400, 8,500 are quite possible. I mean, I'm quite sure that even that kind of a level might get surpassed over the next 12 to 18 months.
How do you approach a sector like banks? Do you think banks will participate in this move towards 8,400? And if yes, is it only private sector that you're looking at, or even PSUs will now come back?
I think it's going to be now challenging for the banking sector to contribute to any outperformance at this stage. At best, probably they can be kind of market performers. There has been a very, very strong rally led by expectations that a lot of recommendations of the Nayak panel or the Nayak committee will get accepted. And I think they should get accepted. And I believe that should be one of the big features of the union budget in July. So I clearly believe it's based on that, and two is of course the rally in the bond yields that we've seen, and the fact that the 10-year GSAC has come off from about 9% to 8.5%. I think these are the two triggers which have already contributed to a massive rally in banking stocks. Unlikely that you're going to see a similar rally of that kind of nature, but I think at best they will contribute to the upside of the Nifty and the Sensex.
You mean even if the budget or whatever policies before and after indicate that Nayak committee is accepted, even then that is discounted?
It would typically be the buy on rumor, sell on news kind of phenomena. It's also something which has happened with the Sensex. If you really look at it on 16th May, if I remember correctly, the high for the Sensex was around the 25,000 levels, and we are still around that 25,000 levels. So while we tend to see a lot of ebullience in the marketplace, but clearly if you look at the Sensex Nifty post 16th May, haven't kind of moved significantly.
Okay, so we are done with IT and banking. What will lead which will be the outperformers in the March to 8,400?
Well, I think both consumer and banking will contribute to the rally. I believe that technology can be a significant kind of a contributor. That's probably one sector.
Consumer, you would mean autos, or would you mean ITC, Hindustan?
I think it's going to be a mix of. It's going to be a mix of all. It will typically be a shift to some amount of defensive, people wanting to kind of have a more defensive portfolio. It could just be large pools of liquidity wanting to get deployed and therefore use HUL, ITC as a nice kind of a parking space. So I clearly believe that's where the upside could be. So you should buy
Nifty Bs, you're saying? That
I think that's also a good buy. I mean, but I'm quite sure that in this kind of a market, you could also kind of buy a set of stocks which have value. Stocks like Reliance have been underperformers or have been market performers, but if the gas price hike goes through and some initiatives or some more visibility on the retail and on the 4G business come in, I think Reliance itself can offer some good upside. And if there are some concrete measures in terms of increasing output for companies like Coal India, which can contribute to earnings, then I think there are a whole bunch of stocks which can really contribute towards, you know, a higher Nifty over the next 12 to 18 months.
Do you see a much higher level for L&T beyond the 1700 zone, or will it become just about a market performer?
I think it would just probably be a market performer. I think it's rallied quite a lot. Valuations are no longer cheap. And I probably believe that at least the earnings growth for the next couple of years seem to be factored in. Now, of course, if you have measures like FDI in defense and those kind of initiatives which get announced, or if there's a huge thrust on some of these areas like defense and shipbuilding and those kind of areas, then obviously, of course, L&T remains a beneficiary of that kind of positive measures and could contribute to the upside. But purely earnings-led, I think now, by and large, the upside is going to be limited on a stock like that.
Okay, finally, can you leave us with something in the mid-cap space? Will it be the outperformer?
Apart from Persistent and NIIT.
No, I think we like the print media space quite a lot. I think over the last couple of years, this is one sector which has grown despite the sluggishness in the economy. So we've seen a situation where the GDP has grown at about 4.5%, advertising revenues have grown at about 9%. If the GDP were to come back to 6 to 7%, it's quite possible advertising revenues could grow at 14-15%, which would flow straight into the bottom line of these companies. So these companies are trading at very attractive valuations. low double-digit to mid-double-digit kind of P multiples, discount to the marketplace, relatively under-owned, have not really participated in this euphoria in the marketplace. But I think if you're a value investor with a 2-year kind of a horizon, I think that's an attractive space to look at.
All right, with a thumbs up to the printed word. Thank you very much for the spoken word,
you.
Nilesh Shah.